So, good evening, all of you. I am Dr. Miraj Inamdar, faculty NISM. I'm working with NISM since last 10 years. Here I do teach sustainable finance, ESG integration, PRSR reporting, along with other subject related to finance. I did my PhD from Mumbai University in the field of ESG integration for investment decision making. 4 year back. So I'm lucky to observe this whole trend for last 8 years related to corporate sustainability, corporate sustainable finance, and also related to the corporate sustainable reporting. So before starting the session, so let me have some about my institute. So NISM is a national institute. It's called National Institute of Securities Market. Is a public trust established in 2006 by Security Exchange Board of India, the regulator of securities market in India. The institute carries out wide range of capacity building activities at a various level, aim at enhancing the quality standards in the securities market. And this is one of our initiative where we are discussing about the current happening in the sustainable finance. Some disclaimer that this whole presentation is for the educational purpose only. Meanwhile, if I am taking any name of company, it will be just for the example. Does not reflect any endorsement or opinion on the quality or performance of the company. Uh, Now let's start with the sustainable finance and corporate sustainability. From 2020 to 2025 till yesterday, I have mixed up these two emoji, which is very much showing the current scenario of the sustainability world. Some are just the hype, some are just the reality. So this, so we are at very transformative juncture in the world of finance. Because the traditional boundaries between financial performance and sustainability are dissolving. Because now the risk is not only within the balance sheet, now the risk is outside the balance sheet as well. So it's not just only the climate risk, but other risk also we are observing outside the company, which is very much impacting the performance of the company. So for last 5 years, what we have seen, especially as sustainable investment or asset under management under sustainability tag has grown very rapidly, especially after the COVID. So total asset under the management from 30 trillion USD to 35 trillion USD, and sometimes in a few years back, I think in 2021 it reached almost 40 USD trillion under the tagline of the sustainability. And see, this is very significant number. If suppose if you consider all the assets class of the world, equity, debt, loan, and this is roughly around 120 USD trillion. And the ESG asset under the management coming almost near about 35 to 40 USD trillion dollar. It's very much significant. Sometimes it reached to 1/3, then the 1/4 also. But recently, there are some fund outflow from the sustainability and mutual funds, and this outflow is also very much significant. So, and other side is also happening that uh, in just last past 5 years or 6 years, we have seen, especially in India, the flurry of regulation related to the sustainability and adoption by the corporate world. As we have seen that now more than thousands listed companies have published their BRSR report. It's around 1200. It's a very good number. And other side, especially for last 1 and 2 months, the outflow in the mutual funds are increasing. So in this session, I would like to discuss means what exactly is happening, where the India is standing, and in terms of the other asset classes, especially the equity, bonds, and loan. So how the future look like? Is really a something to worry, or it is really a something to very to be excited about it? So let's discuss this with some data. If you're seeing global ESG fund asset, so with this graph you are seeing that the asset under the management it's growing, and as compared to 2018 it has significantly increased. See, this is data till quarter third. The most of the happening means the outflow has happened, especially in quarter four after the Donald Trump uh, uh, elected as a president, and in the first quarter of 2025. But one thing which I want to show through this graph is who is shareholders as means in terms of the country in this ESG fund. So generally this data is about the ETF data, but it says that almost Europe is having a highest chunk, not only in the ESG fund, but also in terms of the regulations also, in terms of the reportings, also in terms of the listed company, which is under the lens of the mandatory disclosure also, and various verticals of the sustainable finance and sustainable investment. Europe are quite ahead. Then after come the USA. USA started with low, but in recent past has increased a lot. And then the rest of the world. Uh, the last two quarter which I was talking about. So here you are seeing this drop of the ESG ETF flow for last 2 months, last two quarter. Especially you are seeing it's majorly happen in the uh, American region, means North America and South America. That side it has happened a lot. Emerging market also, we have seen some of the outflow. But see, this outflow, in my opinion, this outflow is related with some political uh, lashback against the ESG activity. So, as the Reuters saying that this is because of the Trump agenda. And see, in terms of the, if you see the US market, especially the BlackRock and Vanguard, these big asset management companies, they are almost holding a 60-70% asset under the management in terms of the sustainable investment. So they have also working under the pressure of the government to withdraw of that. And some other thing is also is happening that some greenwashing cases, because if I will say that those who are preparing the BRSR report, so they can able to understand that while preparing the BRSR report, so you will comes to know one fact that you need to prepare a lots of policies, and this policy has to be approved by board of directors. So this become your internal the rules and regulations, and you have to follow that. Suppose in principle 3 for the employee, you are saying that okay, in the recruitment we will follow gender equality. Gender equality means 50% male and 50% female in each recruitment process. And it's, if suppose, this is a small example I am giving, suppose some recruitment you are not able to do the justification of gender balance, and somebody has noted your internal policies and go against you, so the lawsuit can be increased, and this is happening in the Europe also. It has increased a lot. So I think that phase was basically those company who have mentioned very hypely about their commitment towards the sustainability at that. But current era, the regulations and the professionals, what they are doing, the reporting, it is very much rational. And in case of India, we have not seen much of the cases related to this. In terms of the sustainability market overall, if you see the asset class wise, so you are seeing that one interesting fact that fixed income securities under sustainable finance is increasing very rapidly. You compare just with the 2020, this is a projectile but projection. See, earlier also lots of people have projected, because regression line is a linear line, but it doesn't incorporate it various any negative impact event or outliers. So here you are seeing that equities are leading in terms of the sustainable finance asset class, and fixed income is a second one, and then after the other assets also come into this whole gamut. So with this uh, introduction, means how big this market is, and a recent I will say speed breaker for this sustainability journey. I'm saying this speed breaker because the overall flow, if you are seeing, it's very significant. Some outflow is happening. For example, new fund which has launched overall in the world in last uh, 2 quarters is almost 54 in terms of the ESG fund. And if you compare with the earlier quarters, it used to be 150, 100, and now this number is come to 54. But still, it is there. The new fund is getting launched. If you discuss within India, although SEBI has introduced ESG as a separate theme for the mutual fund, and lots of uh, circular came related to the ratings disclosures, uh, but in terms of the scheme we have only seen the 10 or 11 schemes related to the ESG in India. uh, See, one thing is happening in terms of this outflow, which I have observed, and various thinker also writing on this, because of this political backlash, especially in USA and Europe, also some criticism related to over reporting, uh, because the over reporting means under the European Sustainability Reporting Standard ESRS and CSRD, if you are seeing. So the number of point disclosures is almost more than 1200, in some cases more than 1500 data points a company has to disclose. But as compared to India, if you compare, so in BRSR, just 350 to 400 data point you are disclosing. So in terms of the disclosure, I think we are not facing that problem what the Europe and America is facing, first of all. So our BRSR report is optimum for the company terms. Here, one of the research which I did is that there is a lack of awareness among the retail investor is understanding this product, what exactly it is and what it is for. And traditionally, I think like any other investor, we are very sensitive to the returns also. Because of some geopolitical event, the more return is happening in terms of the fossil fuel and in terms of the some non or bad performing ESG sectors, because of which this sector seems ESG theme seems underperforming as compared to other. And there might be this reason that some outflow is happening in the current two quarters. So, with this introduction, I want to discuss this three sustainable finance product. One is equity, then the bonds, and the loan. So, Mahek Krishnan, you want to ask something, but let me complete this. So we will keep last 10 minutes for the discussion. Let's discuss about the bond. Um, in terms of the bond, SEBI earlier has issued regular related to non-convertible debentures and bonds, and under which they have mentioned about um, green debt securities. Green debt securities, they have defined various type of the bond like yellow bond, blue bond. Earlier, they have already defined the green bond in 2017 circular. Then 2023 circular, they have mentioned about the various other kind of the bond and the transition bonds as well. If you see this, the overall market in terms of the different types of the bond. So here you will see that green bond is having very significant number, and then after you are having social bonds, and then sustainability bond and sustainability link bond (SLBs). SLB is the new phenomena which is emerging and which is also getting popular, and I believe that in future it will get more shares in the whole bond shareholding. What exactly these bonds are? So, especially green bonds is related with any project which is for the positive environmental focus project. Especially we are having renewable energy, clean transportation. If you are raising fund, if company are raising fund related to that, that is nothing but the green bond. In terms of the social bond is where the proceed is using for the positive social impact. For example, affordable housing, education, or healthcare. Uh, if it is used in that case, sustainability bonds is the mix of the green bonds and the green bond and social bonds. Means it's supporting not only the environment but the social challenges as well. It's a little bit flexible, the uh, sustainability bond. The SLVs, the sustainability link bond. Actually, it is not specified with any project, means rather green or social, but it is more about the sustainability related to projects. But in this case, sustainability linked bond, your proceeds or your interest rate is depend on the key performance indicators. Means you are defining the objectives, and as per the objective, if you're achieving that objective, then you will get that kind of the reward in such sustainability linked bonds. So uh, and the next is the loan, which is very much happening area in terms of the sustainable finance. So here the this sustainability loan is first provided by commercial bank. So see, this data is related to 2021, and yesterday Minister of Finance has also issued circulars related to green taxonomy, where also they have defined the various field and attributes. So here in the loan segment, the commercial financial institutions are leading in terms of the providing a sustainable finance. In which mode they are providing? The balance sheet financing is the most famous one, and where this money is going in which project? Majorly in this three area: clean energy, clean transportation, and energy efficiency. It is going. Then after development banks, then after the foreign direct investment is also there. Some very small amount related to philanthropy. But see, this is related to loan. They are expecting the return out of this investment also. So here recently government, central government and state government also has uh, uh, issued various finance under this sustainable finance loan. Um NABARD is also working on the various climate change fund, clean energy fund, and as our government is committed to NDC, and as per the Paris Agreement and UNFCC, so we are trying to become a net zero till 2070. And in that goal, the government initiatives is also to provide the loans related to the adoption, loan related to the transition, and related to the mitigation, which is due to the climate change. And this yesterday, Minister of Finance also issued the taxonomy, means which defining uh, which asset class you will call as a green, or which is you call as a less green. So that they have defining already in SEBI side. Regulator also defined related to the bonds, green bonds and other. And SEBI also has mentioned about the disclosure related to how this proceed is going to used into the various projects, and how they and what kind of the information they should disclose in that. So mitigation, as you know, is the avoidance of the greenhouse gas emissions. So what we can do, and adaptation is related to resilience action, what we want to do. And importantly, transition, support transition in that. So transition finance is basically for change, for going through the more sustainable options. You need to uh, give up some assets, capital asset, uh, and also in that transition, you need to have the expenditure for purchasing more environmental friendly machinery or transportation. So that finance is generally we call as a transition finance. So as per the government estimation, we need a 250 USD, 250 billions of the USD per year for the transition finance to achieve that 2070 objective to become a net zero. So in that, where this finance will come? So that finance, you can see that these are the uh, provider of these loans, which can uh, which can increase or process related to achieving your NDC target. Um, so here, one thing which I want to mention that in terms of the renewable energy, India has already achieved its short-term targets, which we have committed. Means almost 40% of our energy need we are covering through the uh, renewable sources, especially electricity generation. That is a very much significant milestone we have achieved. Well, going forward, also we need the finance, and companies also need to finance that this adaptation and this journey should become accelerated. Now comes to the equity. So in equity, how generally this finance is generally so equity, how this investment decision making has been identified. So they are these famous investor strategies they generally follow. So first of all is that you here you can able to see that ESG integration is the most famous one. Here the country-wise also distribution you are seeing, but my emphasis on the which is the most famous strategy if you want to do the ESG investment. So how you will decide your investment and investment decision? One is the ESG integration. You are in addition to your financial parameter, you are adding ESG into your model and then you are deciding. Second one is a negative or exclusion screening, which is the one of the simplest one. You are just excluding those bad companies which is having a low ESG score, or in those who are in the industry which are more polluted. So you are excluding that companies or unethical companies which you see is that it is harmful for the humans also. So you are excluding that company. So that is nothing but the exclusive screening. Then corporate engagement means stewardship and corporate engagement. The big stakeholder are engaging with the company, and with their voting power, they are trying to change the behavior of the company. So that is the corporate engagement. So generally with the big investors it can be happen, or institutional investor can uh, emphasize the company. Especially in India, you are seeing that for last 4 5 years we have mutual funds. They are disclosing that uh, in each resolution how they are reacting, whether it is positive or negative. So some companies by some mutual funds houses, they themselves doing this exercise. Most of them are exporting this exercise to the proxy advisor services. So they are evaluating each and every resolution and seeing that whether it is uh, in benefit of the theme of the mutual funds, or it is adhere to the principle of the ESG, or their principle of the investment, and then they take the decision on the basis of that. Norm-based screening are basically uh, uh, like mm, globally global norms, um, especially the like SDG kind of the norm-based screening if you are having. So on the basis of that you are investing. So it's nothing but that. Sustainability themed and investing. So it's theme-based investing if you are doing so, that is nothing but. Another one is the best in class. Those who are good performance, you are trying to invest in that company. That is nothing but the best in class screening. Impact investing means in a particular one project. If company want to invest, that is nothing but the impact community, impact investing in the sense. And this is the data of 2020, but for last 4 years, the impact investing also has significantly increase in terms of the investor strategy. If you are seeing this or some significant mutual funds, here you are seeing that some are following the negative screening, which is exclusively strategy. Some are using ESG integration. Some are using best in class methodology. So every mutual fund means are following the different strategy for making their portfolio for the investment. See, here I have deliberately not added the how much return this mutual fund are making. You can compare on their website, but uh, in terms of the performance, if I will discuss, so here, if you see for last 6 7 months, the performance was not very good. But if you compare the last 5 years, if I take the average of top 3 4 fund houses in terms of the AUM, you will find they have given a 15 to 17% CAGR return in terms of their 5 years terms return. With this, the where is the most of the changes happen? So you are seeing the most of the fund houses are approaching this ESG integration, and then after the norm is screening and so on. So, but it is varies between the different region also and different asset classes also. Now, I would like to demonstrate something related to the ESG integration. What exactly this ESG integration and how generally this process is started. So, see, I will emphasize on the two important thing for the retail investors. For retail investors, for them, I think selecting the ESG mutual fund is the simplest way to opt for. Or if they want to do the analysis or compare two companies on the basis of their performance, financial performance, plus their uh, ESG performance, then they can compare uh, they can compare their BRSR reports data, and then they can decide which among these two company, which company is performing better and which company is not performing better. Here I am mostly discussing this point in terms of the institutional investors and their process of having a ESG integration. So this ESG integration uh, having a two phase. Up to one phase of the uh, integration process is very similar to how the traditional equity what we do. Top-down approach, qualitative analysis, then the sectoral analysis, then going into quantitative analysis, then the investment decision making. Here the same we are doing, but in terms of the addition to the ESG, we are incorporating to that. So with this, this is the process of this integration in for the listed equity. So first is the policy which need to decide uh, what is the purpose of your fund, what is the purpose of your portfolio or your investment, and you need to mention your goals and targets, and then the implementation process then start. Then comes the governance, means how you are defining the governance of uh, the investment process, especially of even in terms of the mutual fund. If I will discuss that, who will be the heading this ESG mutual fund, and who will be the risk manager in that, who will be the you need to define or appoint a specialist related to who can do integration job properly. Then main crux is happening in terms of the investment process, means whether it is a fundamental integration you are doing, or quantitative analysis you are doing, or just passive investment or ETF kind of the investment you are doing. In India, we have the NSE 100 ESG fund. In terms of the weightage of that index, if you want to allocate the fund, that is nothing but the passive investment. But in active investment, lots of work has to be happen. And if you go and see the various mutual fund, from the SBI mutual fund to Mirai ESG mutual fund. So you will find out that in their documentation, how means how which kind of the methodology they have found. Most of the methodology they have not disclosed publicly, but in a offer document you will see that what philosophy they are of means following um, while preparing the portfolio for the investment. Then after comes the process of the stewardship, means how actively you are engaging with the company, and if there is some deviation with the company or some decision making, so how you are emphasizing on it and trying to make that company on the path of the sustainability. So then after the monitoring reporting is how you are defining your whether you have achieved your goal or not. So let's discuss about this active fundamentals roles and all. So here you are seeing the fundamental analysis in terms of the very microeconomical analysis, industry analysis you are doing, and financial. See, one thing you understand that as compared to the financial analysis, in financial analysis, especially valuation or valuation of shares, you are having various ratios, so you can very easily can do a ratio analysis in terms of that. But in case of uh, the ESG data, so the ratio means that standardized ratio which everybody is following is not available, which is here in a BRSR and BRSR core, we are having a standardized ratio, but that ratio is very much varying in respect of the industry. And see, when I am seeing that the fundamental analysis and microeconomics analysis, especially you are trying to identify which are the risks which is impacting the company, which is coming from the ESG parameters, which is nothing but the materiality analysis. So this is the first phase of the quantitative analysis which you are doing, the materiality analysis. And see, in a materiality analysis is important because this analysis will give you where are the prominent risk which is the one company is having. And this materiality is different by industry to industry, company to company. For example, beverage industry, the more material risk is underground water if they are extracting from the underground, or energy means electricity consumption. If the prices of electricity increase, how their financial performance is impacting. If the underwater level goes down, so how their financial performance is impacting. If you're seeing the manufacturing industry, so for them the energy consumptions or their raw material supply, so that might be very much having the risk. So you need to identify that risk. So that materiality and assessment is very important for one particular company. So in that materiality, how to do this materiality assessment? So one of the simple thing is that you can use a ready-made tools. For example, here I would like to show one is MSCI materiality mapping tool. So here, if you go and industry wise, you can find suppose automobile manufacturer, if I am saying. So here in this materiality mapping, it is showing me that the carbon footprint is having materiality in terms of the environment, social wise, product safety, quality. Which suppose if some product is become inferior, then they need to call back all the products. It's happened in the past also with the various automobile manufacturer. So that is a one big risk. Labor management we have seen in various company where the employees is going on to the strike, and then their whole supply chain, whole production line has disturbed. So that is one human capital development all. And governance, especially, yeah, as the governance is very much important in terms of the ESG. Most one, if you are ethical, then everything is can be trusted. If you are not ethical, then nothing can be trusted. But because of this, the governance is very much important. So here, some mortality aspects are the company specifics, like human capital development, chemical safety, and community relationship. If you are saying, it may be vary from the companies to company. So another mapping tools on SASB mapping tools, although on ISSB website also you can able to find that. But for the uh, analyzing the company, its future and its future opportunity and future risk, uh, for the fund manager has to do it very diligently, that mortality mapping. And if you want to do a mapping manually, then there are the standards which can help you to do that mortality mapping. For example, in case of um, GRI and uh, TCFD and uh, ISSB, and they have the guidelines to do the mortality mapping. So how you can identify the most risk or less risk in that. And mortality mapping also you have seen in the BRSR reporting that it is also important that you need to mention, means in the company side I'm talking about. Now we are talking about only at the investment side. Okay, so here now coming with the quantitative analysis. So this uh, quantitative analysis is what we generally do in the financial modeling. In financial modeling, we trying to value a portfolio through the whether it is a simple factor model or multi-factor model, or through the discounted cash flow, or through the dividend discount model, or various model. And see, in that model we need to define the weights. The uh, one of the weight is weighted average cost of capital, WACC, we need to define. So that WACC is coming in terms of the ESG from the mortality factors. What we are seeing, what we have seen just now in MSCI tools, means how much it is impacting in that. Because if there is a ESG risk, then that WACC also you need to increase as per that mortality. So that factor you need to define. Then passive index design is a different one. It's due to a limitation of time, I can't discuss that one also. But here the portfolio construction is based on the this discount model. So mortality mapping we have seen. So this is related to the ESG integration. This whole process. So in just 10 minutes, I can't justify to define it. So with the hands-on, you can understand means how generally this financial modeling plus this thing generally happen. So one thing which I want to see, want to discuss related to the WAC. So this WAC, weighted average cost of capital, actually it is a hurdle rate, means minimum what the investor are expecting from the company. Okay, from the debt or from the equity, uh, both the finance. So this formula has been defined by Julia Hudson. So from of the UBS. So she says that in addition to the equity and debt, you also incorporate the social capital or environmental capital, and then you recalculate the value. But she has just demonstrated, but not, it's just a hypothesis, I will say. It has not been any empirical backing for this. But recently in Journal of Finance, there are the various proposed model has been came, which is saying that how this discount factor can be calculated to value the company in terms of the ESG. So these are the various valuation proxies which can use in terms of the valuing the ESG issues for the valuation. One more aspect. So this is about ESG integration, which is I believe need more in-depth analysis and more carefully selecting the parameter and more detailed materiality mapping. Next thing is the equity screening. Means how you can from the portfolio you are segregating those companies which you don't want to invest, and the remaining company then you are shortlisting as per their financial performance, and then selecting the best performer of the company. To demonstrate this screening, I just want to demonstrate you through the this uh, Bloomberg terminal. So here, suppose, so see, Bloomberg is not providing any score so far for the uh, earlier they used to provide, but now they have stopped providing the ESG scores because of the as per the new SEBI ESG rating criteria. So they need to have their place of business from India. So that's why they are not able to provide the scoring. So, but we have the ESG rating agencies, those who have registered with the SEBI. There are almost 9 companies, those who are in the field of providing the ESG data. So here, uh, I came here for this EQS, equity screening. So equity screening, you can able to see the whole, means overall in universe how many listed securities are there, and from this listed security I can uh, I can screen it. For example, I don't want the sector which is from tobacco. So here, instead of including, I am saying exclude this company, update. So some company I excluded. Then I don't want to add the company which is related to alcoholic beverages. So here from the sectors I am choosing. So from the alcoholic beverages, excluded, and then I have updated this. So here 379 is the companies here. So I want the company which represent which is listed in India. So the Indian company I want to configure. So this Indian company I'm configuring here. So these are the 24 companies. And now here you can add some uh, parameter. For example, I want greenhouse gas intensity ratio, GHG intensity per cell. See, similar kind of the ratio you will see in a BRSR core also. So that I'm adding. And here I'm not sure about what the greenhouse gas intensity per ratio averagely. So I will say that should be intensity should be less than to its benchmark race, means from the industry. Okay, relative sector means from the industry average, less than that I want to select. Okay, and with this criteria, how many I am having? So only 2 companies which I have, and then after I can see the company. I am not showing you the company. After that, you will see the list of company because I don't want to recommend any stock here. But there's a one way, and you can add into this screening the scores also. This Bloomberg is not giving scores for the Indian company, but in various other portals you can find the scores. And here I have shown you this on the Bloomberg just to demonstrate how actually it is. But in non-Bloomberg, people also can do this exercise very easily by selecting or screening out the companies and on the basis of that. And if you are having a rating and scoring, that also can be easily done. So coming back to our presentation, so this is a two strategy we have seen in the equities side. So my final words. So here, see, I started with the emoji with the mix of the smiley face and the sad face. But here I want to conclude that this is the most happening era of corporate sustainability ecosystem, because what we are seeing that the whole ecosystem in just a 5 6 years has been developed. You are having, especially in terms of India, I'm talking about. We have rating agencies, regulations. Uh, Rating agencies also working with the companies and fund managers for their ratings. We have the index providers also, those who are issuing the index related to ESG and sustainability. Institutional investors, yeah, for 2 quarters they are not seeing much interested, but yeah, there are the other investors also. They have openly give a positive comment related to India and its efforts, like Mark Movies and others. Asset managers, yeah, for them also it is more happening time to prove that this integration can have a financial performance impact and give alpha with the low downside risk. Because the academic side, it has been proved, majority of the researchers that the integration of the ESG for in the practice of the company can impact their financial performance and get reflect in their market prices and profitability. Regulators, the ample of the circulars they have issued, from the green bonds to the BRSR core, earlier BRR, then rating agency, then new schemes related to the ESG, recent green credits, and so many regulation they have issued related to shape this whole ecosystem. Policymaker also, you will find out that the various schemes which our government are emphasizing, especially like fame for the EV vehicles, for the PM e-drive, PM e-bus services, PM Sarvagar Yojana, and there are many schemes regulator is a policymaker is also doing, and ministries also come out with the various regulation. The most welcoming one, the taxonomy. Now we can also say is that as compared to the European taxonomy, we Indians also have our own ESG taxonomy, is defining which kind of the project is more green or less green. Then proxy advisory services also we are having in India, those who are giving us services to the companies as well as the fund manager, and also consultants also playing a very important role in a whole ecosystem. Those who are providing expertise here, because in a very less time, so big changes is happening here. A whole regulation, flurry of regulation after regulation are coming. So for company to train and do the capacity building for their employees, I think they are feeling some constraints. So outside also this consultant are providing their expertise, not only for the preparing the BRSR report, but also for the raising the fund from the international organization through the, for example, IFC. There are the many successful cases where the Indian companies has raised the fund from the international financial institutions, and also from the local institution. We are also expecting that some new regulations related to BFSI sectors by their regulators soon be released. So that is whole gamut is increasing, and more company are adapting these policies. And one thing, which I'd like to share, that one term which is called green hushing is also shaping the world. This is for last 1 year. This word is very much in discussion. Green hushing. Green hushing is basically companies are doing uh, work related to the sustainability, but they don't want to show it. They are under-reporting it. See, greenwashing is over-reporting which you are not doing. Greenwashing which you are doing already but not showing to the world. why not showing to the public? Because you want to avoid the scrutiny, you want to avoid any criticism by the shareholder or more evaluation by the shareholder. It's happened with some European company when they're disclosing their supply chain, and then the whole the analyst are digging down into the whether they are really doing for the supply chain and all, and they got into the trouble. So that is also happening, especially in the USA, especially where the politically backlash is there. But in India, we are seeing a very positive environment related to the whole of corporate sustainability ecosystem. So this is all about the introduction of this sustainable finance. So I agree that in this short term, we cannot justify this whole uh, assets class, but I am trying to give you some idea related to what exactly it is. So, related to the NISM initiative, which I would like to discuss here. So, those who want to learn very deep down into this, NISM with the CRISIL has developed this course, NISM and CRISIL Certified ESG Risk Analysis, a wonderful course, almost a 30 hours e-learning course is there, which is available over e-learning portal of NISM. I encourage you all to just see it, this certification. And though various other topics also we have conducted along with the other partner, like a KPMG or a state chain or other experts. And this some of this webinars, some of these classes is also available on our portal, NISM Academy. So you can also go and see the various freely available content on this topic. So that's all from my side related to this. If you have any questions, you can ask me. So let me take the questions here. Mm, ah, okay. So yeah, e-certificate will be issued after this webinar. Those who have participated in this, they will receive the e-certificate very soon. Srikanth is saying very informative. Thank you. Can you provide PPT? Yeah, those who want a PPT, they can ask me on my LinkedIn profile. I will share with you. Satyam, okay. How to select a bond and mutual fund on basis of ESG? Okay, so first of all, see what is your philosophy of that? I think JSW has issued sustainability linked bond. Adani also has issued some sustainability linked bond. You are also finding about green bonds. Some corporates also have issued the green bond. They have also mentioned how they are going to use that proceed of that bond. On the basis of that, you can see, and especially how much return you are getting out of that bond. That coupon also they are mentioning. So as per that, you can select this. BRSR framework. Hopefully, we will launch some workshop on this BRSR framework. But there are the ample of the webinars available on various social media channel. In addition to that, we are trying to do some hands-on case-based BRSR workshop. We are trying to identify some good partner with us who can do the practicality of the BRSR framework. Risk analyst course. See, this risk analyst, you can go to the e-learning portal and you can register. Then, yeah, PPT you can get through my LinkedIn. And which are the leading company are in a popular with the corporate segment? So what we can find better ESG. See, the simple way is to see their ratings, how they are having the rating higher or lower. So the rating providers also providing some public ratings to the companies. Uh, Another one is that if some particular company, I think BRSR report is the best report to understand what exactly happening, how many complaint has been filed against that company, how many complaint they have resolved, and the complaint related to which segment. So many types of the data on a BRSR report. So I encourage the investor to, in addition to the financial statements, you do read the BRSR report. A lots of effort companies are investing in this means creating this BRSR report. So there are ample of the ESG reports available by KPM. All the big four, I don't want to take name, but all the big four are having the very good report related to the ESG. Um, which you can read and understand this. And many consultants also have issued various good analysis related to the recent trend in the BRSR report. So key trend is, first of all, one trend is see BRSR adaptation uh, is almost going on. And one thing you have also observed that there are lots of job openings in this area, lots of recruitment, first of all. Uh, and I was discussing with the one HR, and that I realized that there is a lack of uh, good candidate who can actually have some hands-on exercise, because this is very earlier it was very niche area, very few people used to work in this area. Now it is expanding and they need the people. In terms of the education provider, there are the very limited number of certification courses, because you need to define which area you would like to work. Like PRSR is a reporting area where you are going to work in the company. ESG investment is the one area where you can work as a research analyst or a mutual fund. And finance side, loan side, you can work with the government, state government, or the development banks. So you need to define where you want to go, and as per that, you can define your career. So one trend is a bit, especially the career. As per the Indeed.com, is a the growth in the ESG jobs is the highest one, even as compared to data science courses, data science jobs. So one thing is happening, shaping the ESG strategy, and second thing is this sustainable finance, especially the government backing, international institution what they are providing the fund. So that side also there are lots of demand is there, uh, and companies also asking for the fund. Projects funding is also in much in demand. So that is one thing we are surely expecting from this market. How are the environmental impact of the project funded by the green finance being measured and reported in India? So SEBI, for the green bonds, SEBI has issued the detailed guideline where they are showing that what the impact analysis means of their financing, how much the change has happened, and how you have used that proceeds. Like a simple project finance, also here you need to justify that how it has been impacted, and there are the standards to measure that. So GRI, TCFD, that are the major, especially a TCFD are the major standards which measure this. Uh, Course duration is a 30 years, what the certification we were discussing. How does ESG risk influence credit rating and regulatory compliance? Uh, okay, so earlier there was a complaint that, see, for the credit rating of the two company was you can see the almost same. After two different credit rating companies, for the one company if they rate, you will see that their credit rating almost same. But earlier it used to happen that ESG rating was different. Because why it was different, what we have discussed, there are so many strategies for evaluating the ESG. And when you have so many data set, so it bring the subjectivity in the scoring methodology also. So the deviation do happen. So in terms of the credit rating agency, the credit ratings, ESG ratings have some deviation among themselves. Uh, by my name, you can search at my LinkedIn. And are they available in a SEBI or RBI bond and equity markets? Yes, RBI will also has some guideline related to this, but I remember they have one discussion paper related to the ESG and sustainable finance. Market are expecting that they should also come with some regulation for their regulated entity. So that's all from my side. I hope you have enjoyed this session, and there is no more questions here. So thank you very much for listening. Thank you.